Good morning, everybody. Welcome to the Impact Money Show, broadcasting live from the heart of Washington, D.C., where the pulse of global finance, politics, and power beats the loudest. Let's kick things off with a quick look at the weather here in the nation's capital. It's a crisp 61 degrees outside. With clear skies, 0% chance of precipitation, 61% humidity, and a gentle breeze at 6 miles per hour. Perfect weather for a stroll along the National Mall or for diving into the stormy seas of today's headlines, which is exactly what we're about to do. Buckle up because we've got a lot to cover, from the war in Ukraine to the latest U.S.-Ukraine minerals deal. It's happening. The ongoing tragedy in Gaza, U.S. legislative updates, Trump and Elon Musk's latest moves, AI and robotics breakthroughs, and a deep dive into the market, stocks, crypto, oil, and more. This is the Impact Money Show, where we cut through the noise and get to the truth. So let's go ahead and dive in. As I mentioned, it's funny. It doesn't really, I feel like it used to rain every day. It doesn't really rain every day here anymore. I don't know what they're doing. RFK, of course, is saying that he said they don't know who is painting the skies with these so-called chemtrails, but they're going to figure it out. Imagine that. We don't know who is doing it, is what he said. We don't know who is doing it. Right now, it's comfortable 61 degrees Fahrenheit. We have clear skies and a light wind, but don't let the calm weather fool you. The city is anything but calm when it comes to political and economic storms brewing. The decisions made here ripple across the globe. And this morning, we're unpacking the biggest stories driving those ripples. Let's start with the war in Ukraine, where the stakes couldn't be higher. The conflict in Ukraine continues to grind on with no end in sight. Russian forces have intensified their assaults on the Donbass region, while Ukraine's military, bolstered by Western aid, is holding key defensive lines. Recent reports indicate heavy casualties on both sides, with civilian infrastructure, hospitals, schools, and power grids taking devastating hit. The economic fallout is staggering. Ukraine's GDP has contracted sharply, and global energy and food prices remain volatile due to disruptive supply chain. The human toll is even worse, with millions displaced and entire cities reduced to rubble. Depending on who you talk to, 500,000 to a million dead as well. Soldiers, unbelievable what is going on over there. NATO's commitment to Kiev remains firm, with the U.S. and the EU pledging billions more in military and humanitarian aid. But cracks are showing. Some European nations are grappling with domestic pushback over the cost of supporting Ukraine amid their economic woes. Here in the U.S., debate rages on in Congress over the sustainability of funding a protracted war. Critics argue it's draining resources from domestic priorities, while supporters insist that abandoning Ukraine could embolden authoritarian regimes worldwide. The question is, how long can the West maintain this level of support without tipping into economic and political instability at home? It's a high-stakes balancing act, and the world is watching. Speaking of Ukraine, a major development has sent shockwaves through the markets. The U.S. and Ukraine have signed a landmark minerals deal. This agreement aims to secure access to Ukraine's vast reserves of critical minerals like lithium, cobalt, and rare earths, essential for everything from electric vehicle batteries to advanced weaponry. The deal is being hailed as a strategic move to counter China's dominance in the global mineral supply chain, which currently controls over 70% of the world's rare earths. The markets are buzzing. Stocks in mining and tech sectors are ticking up, and crypto, often seen as a hedge against geopolitical uncertainty, is getting a boost. Bitcoin is holding strong at 95.5, where we were as we started the show, as I put together the show here, a little bit over that, 95.653 at the moment, up over 3% this week, while Ethereum is at 1822, up 4% this week. Altcoins like Solana is at 151.68 and Sui at 355 are posting gains, with Sui surging 18% in the last 7 days. The thinking here is that the stable supply of minerals could fuel innovation and reduce reliance on volatile markets, giving investors confidence to pour money into tech and crypto. But let's not get too rosy. Ukraine's war-torn infrastructure and ongoing security risks could complicate extraction and export of the minerals. The deal is a gamble, and the payoff depends on how the war plays out. Now let's turn our most polarizing and heartbreaking stories in the world today, the ongoing crisis in Gaza. This genocide is contentious and it continues, and it's being used by critics to describe the Israeli military actions against the Palestinians, which have killed tens of thousands of people. Most, I would even say, women and kids. Really hard to justify this, in my opinion. Displaced millions more and obliterated entire neighborhoods. The Israeli government, backed by the U.S., insists it's targeting Hamas and defending its citizens from rocket attacks. But all the dead women and kids tell a different story. The scale of destruction, hospitals bombed, aid blocked, and children starving has sparked global outrage. For nearly 60 days, Israel has blocked food from entering Gaza, leaving Palestinians struggling to feed their families. The UN human rights groups are sounding the alarm, with some accusing the U.S. of complicity due to its unwavering military and financial support for Israel. Protests are erupting worldwide, with social media ablaze with calls for a ceasefire. On the other side, Israel points to Hamas's tactics, embedding fighters in civilian areas as a justification for killing all the women and the kids. This isn't just a humanitarian crisis, it's a geopolitical powder keg. The Biden administration was walking a tightrope to maintain the alliance with Israel while facing pressure from the progressives. And now, of course, we have Trump just full-blown it seems like they can do no wrong as far as he is concerned. So that's where we're at with that. And, oil's down today, which we'll talk a little bit more about here. But that powder keg could send the markets either way is really how that lads up. Oil is down today, sitting at $57.10 per barrel, a 1.91% drop. The dip reflects easing fears of supply disruptions, but don't expect it to last. Any flare-up, as I mentioned, in the Middle East or new sanctions on Russia could send prices soaring again. Gold and silver are also taking hits, with gold down 2.51% at $32.35 and silver down 1.33% at $32.39. Investors seem to be shifting away from safe haven assets towards riskier bets like stocks and crypto, which are riding the mineral deal optimism. The U.S. dollar is flexing its muscles, up 3.34% on the DXY today at 99.81. Let me just look. That continues to climb. 99.90 now at the moment. So that just in the hour that I put the show together, we've continued to rise there on the DXY. The DXY is the U.S. dollar traded against a basket full of other currencies. It's also gaining, the U.S. dollar against the Japanese yen at 144.35, up 8.89%. A stronger dollar is great for American consumers buying imports, but could hurt exports and emerging markets saddled with dollar-dominated debt. Meanwhile, the global stock markets are mostly green. The Hong Kong Stock Exchange is up 0.5% at 22,119, and the U.S. stock futures are pointing to a strong open. Dow futures are up 0.73%, S&P 500 up 1.19%, and the NASDAQ futures are leading the pack with a 1.67% jump to 19,987. Tech stocks in particular are getting a lift from AI and robotics news, which we'll get into more in a moment. Back in D.C., the Congress is a circus as usual. The latest fight is over a government funding bill to avoid a shutdown. I mean, surprise, surprise. Republicans are pushing for deep spending cuts, while Democrats are holding firm on social programs and climate initiatives. It's all just theater, really, because the spending's going up. So the spending's going up, the taxes are going up. Don't look at how much they're taxing you, look at how much they're spending. That's how much they're taxing you right there. There's also bipartisan concern about President Trump's tariff policies. We'll touch on that later. Senate Minority Leader Chuck Schumer has called out the chaos in the Trump administration, pointing to internal feuds over the trade policy. Another hot topic, a coalition of unions and nonprofits are suing Trump and Elon Musk and agency heads to block mass federal layoffs proposed by the Department of Government Efficiency, DOGE. The plaintiffs argue that these cuts would gut essential services and cost the taxpayers $135 billion due to rushed implementation. Labor law experts are also raising red flags about conflicts of interest, particularly with Musk's access to sensitive government data. It's a messy fight, and the outcome will shape the federal workforce for years to come. Speaking of Trump, the 47th president is making waves. As always, his tariff policies, 20% on European imports, 120% on China, have sparked a trade war, with China vowing countermeasures. Critics, including Elon Musk and his brother Kimball, call these tariffs a permanent tax on Americans, warning of price hikes and inflation. Trump, however, insists they'll protect U.S. jobs and force trading partners to the table. J.P. Morgan CEO Jamie Dimon recently warned that a recession is likely outcome if tariffs persist. Trump's relationship with Musk is under scrutiny. Reports suggest Trump is telling insiders that Musk's time in the White House is numbered, with the tech mogul potentially stepping back from his DOGE role in weeks. Some see this as Trump distancing himself from Musk's controversial tactics, like his public spat with trade advisor Peter Navarro, whom Trump called a moron. Others say it's just Trump managing a political liability. Either way, the drama is peak Trump administration. Elon Musk remains a lightning rod. Beyond his White House role, he's fending off reports that Tesla's board is eyeing a new CEO. Both Musk and Tesla chairs have slammed these claims as false. Meanwhile, Musk is pushing for a U.S.-EU zero tariff zone, a bold vision that clashes with Trump's protectionism. His influence extends to social media, where he's accused of amplifying far-right voices and normalizing toxic political discourse. Musk's DOGE tenure is drawing heat. A whistleblower alleges that DOGE, effectively led by Musk, accessed sensitive labor data and covered its tracks, raising ethical and legal questions. With his special government employee term nearing its end, speculation is rife about whether Musk will stay on or return to his empire of Tesla, SpaceX, and X. Love him or hate him, Musk is reshaping the political and economic landscape. I'll tell you what, guys, it is hard for me to imagine the White House and the current administration without Elon Musk. I mean, it's just crazy. Hello, Dr. Subhash. Good to see you, brother. It's hard to imagine. Now let's shift gears to AI, where innovation is moving at breakneck speed. Recent breakthroughs include AI models that can predict protein structures with unprecedented accuracy, potentially revolutionizing drug development. Companies like Google, OpenAI are rolling out AI-powered tools for everything from content creation to financial analysis. The catch? Ethical concerns are mounting. Regulators are grappling with how to curb AI-driven misinformation and job displacement without stifling innovation. Investors are pouring billions into AI startups, driving up valuations and fueling the Nasdaq's rally. But there's a dark side. AI's energy consumption is skyrocketing, raising questions about sustainability. Here in DC, lawmakers are debating AI regulation, with some calling for dedicated federal agency. The race to dominate AI is global, and the U.S. is determined not to fall behind China. Later on in the show, of course, I'll have our good friend George Ferrato on. He is building AI server farms, basically, where they have the units there and have all the power for the AI to compute, which is just big business. Closely tied to AI is robotics, where we're seeing game-changing advancement. Boston Dynamics recently unveiled a new humanoid robot capable of complex tasks like warehouse logistics and elder care. Tesla's Optimus robot is making headlines, with Musk claiming it could be a $20 trillion market opportunity. Military applications are another frontier, with drones and autonomous vehicles transforming warfare. The economic impact is massive. Robotics could boost productivity, but also disrupt labor markets, especially in manufacturing and retail. Policymakers are under pressure to retrain workers and address inequality. Like AI robotics is a double-edged sword. And the Impact Money Show will keep you ahead of the curve. Cryptocurrency prices. Let's wrap it up with a closer look at crypto, where the minerals deal and the market optimization are driving gains. Bitcoin is moving. 96 now, 159. Look at that, huh? It is moving. Ethereum, 1831. BNB, 605.06. Market's moving. I have a funny feeling about BNB. Solana, the crowd favorite Solana, 151.90. Everything's pumping right now. Among the altcoins, everything is just moving. We're really due an alt season here. TON is at 315. Is that right? TON. Where's my TON? Am I taking TON off my... No, there it is. 317 on the TON coin. It's moving. It is moving. Litecoin at 85.73. Litecoin. It's probably moved up a bit. Let's see here. Litecoin 86. 86.03. It is moving. It is moving. It's a bullish day, but volatility is always lurking. That's the world we're living in. Wars, deals, crisis, and breakthroughs all colliding to shape our future. The Impact Money Show is here to make sense of it all, connecting the dots between money, power, and progress. From the war in Ukraine to the tragedy in Gaza, from Trump and Musk's power plays to AI and robotics revolution, we're covering the stories that matter. And let's not forget the markets, stocks, crypto, oil, and more, where every tick tells a story of risk and opportunity. Stay with us. We're about to bring on the great Matt Dixon with the Market Watch report. Sir Matt.
Hey, good morning, Bruce. Just thought I'd show my face. Yeah. Just to clarify, you said 70%, 77% of the world's rare earth reserves were where?
70%. Hold on a second. I remember that figure.
You said 77%.
It's currently controlled. China's dominance over the global market.
You got it spot on. Yeah, absolutely right. Yeah. Sorry, I was just I was half listening, didn't quite hear what you said, but yeah, you're right. 77% is controlled by China, and I understand that Ukraine potentially 5%. But I
mean, that's a decent amount for sure. 5% on the deal. It remains to see how this thing plays out, though. You know what I mean? I feel like, you know, the optimism will go. We'll see how much rare earths we end up getting.
Yeah, absolutely. So I'm just sharing my screen as usual. Hopefully you're there. I'll just
not yet. Yep, there we are. Yep.
Yeah, so I just thought you didn't mention this. This was big news yesterday, wasn't it? US GDP growth fell off a cliff.
Yep.
So last time we had 2.4% was the last GDP last quarter of 2024. So the first quarter, this is during the Trump presidency, we fell to minus 0.3%. Now, this is the first negative GDP we've had since 2022. So going back 3 years now, it was honestly It's a bit of a joke yesterday. Trump was saying that this is Biden's fault that we have negative GDP, and yet all through the last 3 years we had positive GDP, and now we have negative GDP. It's just funny how he said that, but as I said, let's hope there's a bigger plan behind it all. that comes through. But you're right, we've had an amazing pump so far on Bitcoin. But wasn't that just what we were saying yesterday? If I just remind you what we were talking about, we were talking particularly about currencies, dollar index. Now I said that we had an A up, a B down. We're pushing up in a C wave. As we push up, that should actually push the should take Bitcoin a little bit higher. Once we've achieved that, the C wave, then we'll push down again with dollar index, I believe, and that will result in weaker Bitcoin. But for now, we're expecting stronger Bitcoin, stronger cryptos, and that's precisely what's happening. Oil is falling even as we speak. I mean, 56.
Wow.
Yeah. And that, if we think about what are the reasons for that, well, actually, part of the reasons are tariffs. I mean, as I said yesterday, shipments, from China are down 60% to America. So obviously consumption is down somewhat, but it's not just a consumption story, it's also an oversupply. So OPEC are actually beginning to supply more into the market, and they're scaling back on the cutbacks that they had. And so this is actually causing an oversupply in the market. So it's not just, the American economy is still actually, even though we saw this big negativity in GDP, to be fair, that was, I understand, partly responsible for the big rush to buy goods basically before the tariffs took hold. And that caused this GDP shock that we've had. So we'll look forward to next quarter and see what happens there to maybe get a more reliable figure, perhaps. So we'll see. But for now, anyway, oil price is falling sharply. This is in some ways a good sign. It means that business is cheaper, because one of the big expenses for business is energy, is oil. So that's a good sign in some ways. It also means inflation. There's going to be downward pressure on inflation. So we've got a problem with tariffs pushing inflation up. There's no doubt tariffs will cause increases in prices, no doubt at all. But if we see much lower oil prices, then that will sort of counter that a little bit. So hopefully that will help.
It's a huge, it's a massive cost.
Absolutely, yeah. So hopefully, if you're seeing oil price falling this sharply, but as I said, we could see it fall a lot more sharply. And there are definite concerns, especially after yesterday's GDP figures. The talk of stagflation is rearing its ugly head once again. So stagflation, of course, is stagnant growth with inflation. So at the moment, we still have some growth, but these tariffs are stifling growth, and they will potentially stoke inflation. And so we could have stagflation just around the corner. Let's hope not. I've said for a long time, though, that I think recession is coming in 2025. So we'll see. The signs are there. We had the SARM rule was basically telling us that it's the most reliable recession indicator, and it's telling us recession is coming in 2025. So as I say, we need to watch for that. But it doesn't tell us necessarily that things are going to be altogether bad for risk assets. I mean, as I say, if we jump back to Bitcoin, we've already pushed to a new high here. Now, this is really nice if you look at it. We've got potentially a wave 1, wave 2, wave 3. Now, wave 3 is very often the extended wave. It's not extended, in fact, in this case. It goes to just over 100% times wave 1. Now, wave 1 is a slightly unusual wave, and it's in the form of what we call a leading diagonal. Now, leading diagonal is one of the few impulses that allows for overlap. You can have leading diagonal and ending diagonal. They're quite rare, in fact. And this looks like one of those rare leading diagonals. Now, they normally form trend lines for the tops and the bottoms, which is exactly what's happened here. And we've got overlap where basically wave 1, 2, wave 3, wave 4 overlaps into wave 1, which normally isn't allowed for Elliott wave. And also wave 4 overlaps into the territory of wave 3 here. Sorry, wave 2. So there's a lot of overlap anyway, which basically is telling me that this is probably a leading diagonal. This is wave 3. We've got an ABC wave 4. And we're pushing up now quite nicely in wave 5. Even as we speak, we're now 96,290 on Bitcoin. So this is what was expected. So if I scroll out a little bit, this was the expectation. It's actually very encouraging, because it's telling me that if this forms into 5 waves, which it already is doing, 1, 2, 3, 4, 5, then that is an impulse in the making. That means that probably the low is already in place here at 74,000. I did say for a long time, the line in the sand is 69. I wasn't saying it's going to 69. I was saying the line in the sand is 69 that we cannot cross, because that was the previous all-time high before the FTX crash. And if we cross that, it actually had big bearish implications. But the fact that we haven't crossed it, the fact that we got reasonably close to it is quite satisfying. 74,000 is within, certainly in Bitcoin terms, within touching distance of 69. So we got reasonably close. So it's actually a very satisfying level. And the fact that we appear to be moving up we now have 5 waves to the upside, that is an impulse. It tells me now that the impulsive direction is now to the upside on Bitcoin. I've been saying for some time that whilst we will get a pullback, and even here, even if wave 1 goes to here and we get a pullback, we will get a pullback, because wave 2 pullbacks tend to be deep pullbacks. Then following that, we should get the rally, historic rally to new all-time highs for Bitcoin, but also for a lot of other assets, a lot of crypto, S&P, and we talked about this yesterday, and it appears to be playing out exactly as we expected. According to our chart expectations, it's playing out beautifully. So I did say I'm not prepared to go long just at the moment. I mean, the thing is, we haven't had an extended wave 3. Normally, within an impulse, you will normally see one of the waves extended, either wave 1, 3, or 5. And as we don't have wave 1 or 3 extended, it's possible wave 5 could be extended. So we could potentially even get a larger wave 5 than I've shown here. So this isn't a fixed level. It's just an indication that we're going up in wave 5. We could extend in wave 5. So again, there are no certainties. We have to play it by ear as it goes along. But following the completion of wave 5, we should then get a reasonably deep pullback, probably in wave. The wave 5 will complete wave 1 up, and then we should get an ABC down in wave 2. That will be the area that I want to basically dollar cost average and buy in, and basically fill my bags as much as possible. So expectations yesterday moved a little bit. Here's the June expectation of an interest rate cut, 60% chance, over 60% chance of a cut in June. But if we're looking at the next one, 7th of May, we can see there's 91.6% chance. So it's roughly the same as it was, not changed a great deal. Despite yesterday's figures, the chances are we're going to hold in May. So rates will hold. So I guess it depends on the guidance that the Fed gives then, what happens with markets. But I tried to look at a reasonable expectation of when things might happen. Quite interestingly, I was expecting a move up, and that could take us, this could potentially take us to somewhere around the interest rate meeting in May. So we might push up until that May the 7th meeting. Then if we get some pretty negative commentary, maybe hawkish commentary or something, we could pull down a little bit that could be cause the pullback in Bitcoin. And then possibly, and this is I've got it aligned beautifully with the June the 18th meeting, that interest rate meeting, that could be when we see lower rates and we see some dovish commentary and we start to see markets rising again. That could give us the impetus for the push higher to the historic highs, the new all-time highs for Bitcoin and the rest of the market. So that's my proposed timing. It's not perfect. It's not necessarily absolutely right, but I think it looks reasonable. And when you're looking at Elliott Wave, it doesn't actually tell you timing, but normally you do say that the waves need to be looking reasonably proportionate. If it looks completely out of proportion, you probably got something wrong. Now, this looks quite proportionate to me. So I wouldn't be at all surprised to see this as the expectation. And the pivot points here and here are based upon the interest rate setting meetings, the FOMC meetings to set interest rates here on June the 7th and here on May the 7th, here on June the 18th for those meetings. And it just shows you how mature Bitcoin has become as an asset, that it is so dependent upon liquidity in the market. So it used to be purely speculative, but now it's based a lot more like stocks and shares on how much liquidity there is there. It's a much more mature asset than it used to be. And even so, though, most of the other assets, even though they're less mature, they do tend to follow suit with Bitcoin. Bitcoin is still the leader. But what I'm suggesting is, and I did mention this briefly yesterday, whilst I think Bitcoin is going to new all-time highs, and I don't know the level, maybe 120, maybe up to 150,000. I'm not sure what the level might be. I mean, we could guesstimate now, just based on this this projection here. If we gave a wave 3 1.618, that would take us potentially, a wave 3 as a minimum would take us to 120,000 on Bitcoin. That's if this wave count for wave 1 and wave 2 were correct. Then wave 3 would be 120,000, but you still have a wave 4 and a wave 5 to take you higher. So my expectation is likely we're going to see, when we start to, after this correction here, when we start to see the move up, that correction could take us back to the 80,000 level, but 80 to 120, then seeing a 50% rise in Bitcoin price. But a 50% rise in Bitcoin could easily equate to, you know, many X multiple rise for other cryptocurrencies. I don't doubt that Solana would move to new all-time highs. So I do think Solana still has, you know, a rocky road ahead short term. Like Bitcoin, we'll get that pullback. But following that, even if we pull back on Solana, let's just move on to Solana briefly. If we get a pullback on Solana, relatively deep pullback, to maybe it's only around $100,000, sorry, $100, sorry. We're going to push to $300. So you're talking 3x minimum, and maybe more, because I think Bitcoin will push, should push even higher in that fifth wave. So I'm really bullish Bitcoin. I'm even more bullish altcoins. So this long-awaited altcoin season, I don't think it's based on just a cycle, and we've got to expect it because it's a cycle, but I think it will be based on liquidity in the market. The liquidity's got to go somewhere, and it goes into these risk assets. It will go into Bitcoin, no doubt. And as I say, push Bitcoin probably to a minimum 120,000 just for wave 3. But I think we're going to see a major rally and what we would call altcoin season. So what we have now is Bitcoin dominance. That would fade as altcoins start to overtake Bitcoin in the rate of rise. So Bitcoin would still rise. So even though Bitcoin dominance would be falling, Bitcoin itself would still be rising, but it's just that the altcoins would be rising at a faster rate. And that's why you see Bitcoin dominance fall when you're getting more towards the end of a cycle. And so this I think will be the cycle that I think we're just nearing the end of wave 1 higher. And that is a time when historically, from Elliott wave perspective, there isn't really solid conviction in the market. There's still a lot of doubts. There's a lot of worry over tariffs, the economy, the geopolitics, all sorts of things. And you get the wave 2 pullback, normally a deep pullback, because there is a lot of negativity and concern in the market. But then when wave 3 kicks in, that is then the powerful wave that will take us to new all-time highs for Bitcoin and many other of those assets. Yeah, just seeing oil is still continuing. It's just, yeah, still bouncing around that 56 level. We've looked at the S&P, sorry, not the S&P, we've looked at DXY, and as you said, and as we said again yesterday, we expected, we've got the A wave up. This is in dollar yen, by the way. When dollar yen's going higher, it's good for markets. It's correlated directly with the markets. So I said yesterday we had A wave up, B wave down. We're going to push up in C wave. That's going to be good for the markets. And that's precisely what we're seeing. So this is amazing that we're looking at currencies, which, as I said yesterday, have a long track record. We can predict them better than cryptos. They can actually give us the direction through correlation. They can give us the direction of risk assets and cryptos in particular. So these expectations are just playing out exactly according to our expectations. And as I said, when we get a push up in dollar yen, that's going to push us up with SPX. So jump into SPX there. We're going to get a good jump higher in SPX. We pushed up a bit yesterday. We're going to push even higher. So this C wave, I actually did have it labeled higher. It may be that we get ABC. It may be that C wave equals A. So again, just removing this fib measuring tool here, I'll just measure wave A very quickly, which is from there down to there. That's the measurement of A. I'll transpose it to B. That will give me a target potential target for wave C of 5,788. We're in right now 5,634. That's telling us still a bit of upside to come for the S&P before we get the next wave down. It could even be that S&P is also a leading diagonal, potentially 1, 2, 3, 4, and this being a fifth wave to the upside would give us a leading diagonal for a wave 1, and then we get a pullback in wave 2. So it kind of aligned pretty much with Bitcoin. The reason I say leading diagonal is because this move down here overlapped this wave up here. So I've got it labeled as ABC, but actually I think it could be a leading diagonal 1, 2, 3, 4. 1, 2, 3, 4, 5. Once you finish wave 5, that's a larger wave 1 fractal. Then we get the wave 2 pullback and then push to new all-time highs. So you have to be a bit adaptive when you see waves developing and unfolding. Sometimes it only tells you as it's happening, but it still gives you an idea of what's going to happen moving forward. And this all adds up to being bullish for the markets. I'm very confident that yes, we are going to get that pullback in wave 2, but after that, it's what I've been waiting for. It's the opportunity to dollar cost average and fill your bags. So we'll look at that. When are you going to Dubai, Bruce? Are you there yet?
Not yet. I will be there on Monday.
Okay, yeah. Sadly, I won't be able to see you there, but as I say, we do need to talk.
Yep.
So yeah, on the markets overall, whilst we're pushing up a little bit higher, I wouldn't be tempted, as I so often say, markets are rallying. We're at local highs at the moment on the markets. I wouldn't be tempted to jump into longs, particularly unless you put a very tight stop loss and then move it to profit as soon as we move into that profit. So I do expect markets to move higher short term. You can make some profits out of it, but just be very, very careful with your risk, your control of risk and risk reward. Because after this move up higher, we are going to get a pullback. I'm not quite sure what's going to cause that, whether it's geopolitical, whether it's some other economic shock, whether we get a shock with jobs. Let's look for the jobs figures out of the US and see what happens there. So there's even been, I don't think they've actually signed that minerals deal yet, have they?
No, I think they signed it. That's what I heard. That's what I read. Look like two guys sitting at a desk. You know, with AI, you never know.
That's good, because I heard there may have been some hiccups, last-minute hiccups, but maybe
I wouldn't be surprised. I actually don't think they're ever going to make good on it either. I think they're going to sign the deal and then nothing really will ever.
Yeah, I mean, it's not going to go down well with Russia, so I don't know quite what's going to happen.
Well, it'll just be the corporations anyway that make the money. It's not going to be, you know what I mean? I mean, that's my prediction anyway.
Yeah. So I'm just having a look at the tools here. Just trying to see. It's got it as tomorrow. May the 1st, that's today, in fact. ISM manufacturing out today. Expected to fall slightly. So, yeah, nothing major. So there's no major news out. Interest rates, let's just see. We've got, what do we have there? Interest rate decision stayed on hold in Japan, which was according to expectation. So, yeah. Nothing to rock the markets. Let's hope the ISM comes out in line. Nothing to rock the markets again. So we're probably into the weekend. Things should continue quite nicely. Yeah. So that's pretty much a wrap for today. I think I'm just so pleased that what we said yesterday has actually worked out perfectly according to the currencies, according to the crypto assets, and so on. So. Yeah, I think there's some fireworks to come there fairly soon, so let's keep an eye on the figures that come out.
Amazing. Thank you very much, Matt.
Thank you, Bruce. Thank you, everybody. Catch
Always
up soon.
A pleasure.
Cheers. Bye-bye.
Cheers. Great Matt Dixon with the Market Watch Report, world-class analysis that we get here on the Impact Money Show daily. I had a chance to sit down. You know, we talk a lot about AI on the show and the different the different things that are going on. Of course, I've had George Fajardo on the show a number of times, and today, actually we recorded it yesterday, and we talked about the fund that they're raising in order to deploy onto these different AI projects. Pretty interesting interview. Of course, he is joining us, George and his team joining us in Dubai for the Global Family Office Investment Summit. So we're really excited about that. Here is our interview from yesterday where we talk about all this. And we are back here, of course. We're headed to Dubai for the Global Family Office Investment Summit, putting together a group of interviews for there. We've had George Ferrato on a number of times. He's doing some amazing things in the space. Let's bring him on again. Sir George, how are you?
I'm doing great. How are you, Bruce?
Fantastic. Thanks for asking. Well, getting pretty excited for Dubai. I do think it's going to be hot, so make sure to bring your shorts and your sunscreen. But there's going to be a lot of money there, I'll tell you that. Looking forward to everything. How are you?
Oh man, I couldn't be more excited about this trip. I'll weather the 100 temperatures for this event. I tell you, I mean, we're so excited about it that we can't wait.
Good. Well, one of the things about these Global Family Office events is, and there's Token 2049 going on right now, which it's an awesome event, right? This is a great event, but there's just so many people trying to get in there. So many, everybody can just get in, and you have something like the Global Family Office Investment Summit, and really, takes the cream off the top and brings together an amazing group of people. Now, we are heading there, leaving just in a few days. What does it mean for you personally and professionally to be speaking at the Global Family Office Investment Summit in Dubai?
I mean, I can't tell you, what a huge honor it is for me personally, and then, for us as a company, as an organization, to have this amazing opportunity. When we were first asked to speak at the Global Family Office Investor Summit here in the U.S., here in Miami, I was so excited, and then just to be asked back on such a larger stage, right? Like the big leagues going to Dubai to present, especially with the type of platform that I've been granted. I mean, it's a huge honor for us.
Great. Well, I know we're super excited about it as well. And this time of year, May is just absolutely it's really happening there. So super excited about it. Now I understand that you have a big surprise announcement about your talk in Dubai. Is that right?
Yes, absolutely. So, you're going to hear it here first, okay? This is the first time I'm talking about it publicly. What we are doing is that in Dubai, we will be unveiling the world premiere of our exclusive interview, myself exclusively with Sophia, the world famous humanoid AI robot who came to us and interviewed me about our newest endeavor, which is the launch of the Keystone Energy Fund.
So cool. I mean, everybody gets to see this on TV, right? We all see Sophia, the humanoid robot. And I don't think I've ever actually met her. And I guess it is, you do kind of refer to it as her. So what was that? What was that like?
I mean, look, it was an amazing experience, just to even be considered and asked to participate in such a exclusive, type of experience, right? And I mean, just to kind of give you a little bit of perspective, the type of people that have had this opportunity are very rare. I mean, she's interviewed the likes of Tony Robbins. She went on a date with Will Smith, believe it or not, which, by the way, I kind of felt like we were on a little bit of a date, and you'll see what I mean when you see the actual interview.
Really?
So she was, winking at me a few times. But on a serious note, she's actually...
George, you ladies, man.
Don't tell my wife. She'll get, she'll get jealous. But, on a serious note, she's been interviewed by the likes of, Andrew Sorkin, right? Talking about, Saudi Arabia's initiative in heavily investing in artificial intelligence and the implications that has for, just globally, right? And just for humanity in general. She's also, she's presented at the, United Nations National Forum, right? And so that just gives you a little bit of an idea of the scale and impact that being interviewed by the likes of, Sophia, the humanoid robot, is like. And so to have had that experience, it's a huge honor for us. And it basically gave us the opportunity to really go into our newest endeavor, which is, as I mentioned, the launch of Keystone Energy. And it's a very interesting premise why she came to us.
Yeah. Well, let's talk about that as well in a second. So, I mean, Sophia has fascinated the world for years now. Tell me, I mean, what drew her to engage with you?
Yeah, so the reason they came to us is because basically the premise behind it is that obviously she was created to help humanity, right? To expand their knowledge and to bring us into the future, right? And so there's been obviously questions focused on the AI side of it, the AI component with the quantum computing and all the data processing that goes along with it. The part that has been overlooked has been the insane amount of energy consumption that it's taking to be able to compute, right, all this data, everything from as I mentioned, the quantum computing, AI, the LLMs, even crypto mining, data storage, cloud storage. All of this information has the amount of energy that it takes has been overlooked. And if you look at the reports and all the projections, electricity energy consumption is due to increase by 500% by the next 5 years, by the year 2030. And if we don't do something about it now, we're going to be experiencing a huge strain on the grid, and I'm talking about globally, on a global scale. And we're going to have large issues with which is energy, energy shortages, rolling energy blackouts across the globe. And so at Keystone Energy, what we focused on is we've identified an opportunity in the market, not just for our investors, but also we look at it as an impact project where now we're going across the country here in the U.S. and plan to expand globally and acquire what's known as stranded energy sites, so that we're now basically building out the infrastructure for decentralized energy grids that will now be providing the necessary power to these massive, gigantic data centers that require all this power to compute all this quantum computing and artificial intelligence.
Well, you're on the bleeding edge, really, of what's going on. I mean, this groundbreaking project at the intersection of AI and global investment. What inspired you to explore this space? And how do you see it evolving over the next few years?
I mean, this is the new gold rush, right? For the last 30 years, data has been the biggest commodity, right? Data collection. Everywhere you go across the board, down from your local grocery store all the way to, Facebook, Meta, Instagram, every single social media, all they've been doing is storing our information so that they can then process it and use it to market. And then, of course, for AI and everything like that. So now that we've had all this all this data that we've acquired over the course of the last 30 years, now the next biggest commodity is going to be the energy. I mean, that's just the bottom line. And so we're at the forefront of this next gold rush. And again, it's really more about the social impact, right? Because no one wants to live in a world where there's rolling blackouts, right? Where there's such a huge strain.
Look at Europe. I mean, they got hit hard over this week.
Yeah, I mean, listen, just a couple of days ago, Sam Altman came out and said, how much just using two simple words like please and thank you, when you're just simply typing into your chat GPT, millions and millions and millions of dollars worth of electricity that's costing, that it's consuming just by using those two simple words. Now, you just imagine that on a global scale, everybody that's using every single artificial intelligence app, not just ChatGPT, but everything else that's out there today. And so when you think about it, one of these data centers alone requires more energy than, your average, metropolitan city. Really.
Wow.
And so we're going to see a lot of these decentralized grids as we continue to grow. There's going to be cities forming around data centers. These data centers are going to be now the hub, the city centers, where, just a year or two ago, Microsoft or Google, they would have never dreamt of going off into remote areas to create the data centers. They wanted to be near the closest city center, right? The
Right.
nearest grid. And now that all has changed. And so we're in the forefront to basically acquiring these sites, building out that infrastructure, and creating that infrastructure for them to, and providing that energy, that electricity, that power for them to come in and get those data centers built so that they can continue powering all this technology.
Well, I always say please and thank you because I'm scared of Sophia coming after me. I mean, this AI it's scary stuff. So I want to. Well, wait. I saw like a meme or something about it. That this is the guy that said please and thank you. I'm like, that's me. Okay.
Yeah, let's hope we end up on the right side of history on this one. But we gotta stay with it ahead of the times and at the forefront of innovation. And so that's what we're doing here.
Amazing. Now, and we only have a couple more minutes, but one of the things we talked about earlier in the week was these stranded energy sites. You did mention them again today. So now, where do you envision, or where are you planning to put these different plants? Are they going to be out of the country? Are they in the country? Yeah, or it's both? What is that looking like?
Well, yeah. So, these are regional localized energy sites. And so, obviously that's part of our secret sauce is the specific locations. I mean, what I can tell you is that, we're working with the hyperscalers and they're sort of identifying for us the certain areas where they want to be. And so what we're doing is we're going out and we're identifying within these regions where there's these, I'm talking about, hundreds, if not thousands of acres worth of, remote land, hours, hundreds of miles, maybe 1,000 miles away from the nearest, major city center where, there's deposits of natural gas and other sources of power that can be harnessed. And basically, like I said, once the infrastructure's there, be able to construct a decentralized grid. And the reason is stranded, just to give you an idea, is because these areas are so remote that just logistically, from a technical standpoint, you're looking at 7 to 10 years away from building out the necessary lines and connections to be able to connect to the nearest grid, right? So rather than doing that, we're just deciding to say, hey, let's just keep everything contained and just decentralized. And I guarantee you that within the next 10 years, you're going to see new cities being formed around these data centers because of this. And so there's going to be some new cities popping up. And now this is a strategy globally. We're starting here in the US at home first, but we already have plans to scale and go out into South America and parts of Europe and even Africa.
Amazing. And so one last question, how are you finding the current, are they seeing this as like a national security issue? Are they seeing it as something important, or are you really just so bleeding edge that nobody knows what's going on?
Well, it's funny you mentioned that. I definitely think that the current administration does see this as a basically a security, a matter of national security. I mean, President Trump back in February announced an energy crisis when he addressed the nation because of this. We're seeing countries like China, have all hands on deck, and they're also competing for AI dominance, and they're basically installing new coal mines almost on a daily basis to be able to power this. And so we got to keep ahead of that. Back in the 60s, we had the race to who was going to be first to the moon, right? First to outer space, first to the moon. Then we had the arms race, right? And so far, the US has come out on the forefront of all these global races in history. This is the next thing, the energy race, that to get to win the AI wars, but you need the power to do that. And so that's where we see it, like I said, as a social impact for us here at home, but also humanitarian impact globally, because beyond powering technology, countries need electricity for the inhabitants, for the population to thrive. And so we can't be robbing from the humans to power technology, right? So we gotta kind of have both. And so that's where we're coming in the forefront of this.
Well, I mean, it's the future is definitely going to be super interesting. This is super interesting. Looking forward to being on the ground there with you in Dubai. Thanks so much for coming on again. It's KPI-capital.com is the website. And thanks again.
Super fantastic. Thank you for having me. And I guess the next time I'll see you will be in Dubai.
Next time we see each other, we'll be in Dubai. And of course, folks, we'll bring you that interview as well here on the show, whether it's bits and pieces or live or whatever else. I promise we'll show it.
Hey Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-bit, Toobit. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously, with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with a credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.